Here we have the hourly price chart for BROADCOM Incorporated, stock ticker AVGO. Here we can see that the stock continues to trade under a bit of selling pressure here. We're really starting to kind of, flatten out and, attempt a recovery here at somewhat lower levels. Overall, we have currently posted lows that come in at roughly 153.90. This was posted during the July 18 trading session. And as we can see here, we are trying to stabilize from these lows a bit. We are getting a bit of an upside sort of price trend here. But the problem that the stock is really running into at this point is that, this prior break and breakdown to the downside really forced the stock through all of its major exponential moving averages on the hourly chart. So it's a significant chart. It's not a 5-minute chart. The hourlies and the dailies tend to be the most commonly watched price charts. So, these moving averages take on a greater level of importance. And as you can see here, the stock has had some trouble here breaking above some of those averages. So in particular, what I would point to, really would be this price failure here. Then we have some additional price failures here where we're really not able to close above this 200-hour exponential moving average. All of that said, though, we are starting to form some higher lows here. So it is starting to look like the market, is attempting to try to find the bottom here and to start buying the stock at this discounted price. As we can see here, the trading volumes have started to pick up in the positive direction. We are starting to see more green than red in the trading volume bars. So this does suggest that, buyers are starting to enter into the market, and trying to find a discount for this stock. So the real question here is whether or not these new upside moves here are going to be sustainable. Unfortunately, there are some issues here that we have to point out. Not only the fact that these bounces have been relatively minimal. So let's just take a look again at this current rally, if we can call it that. I mean, it would be a very short term rally. So to the downside, we have lows of 153.90. That would be July 18, and then Friday, July 19. We saw highs here coming in at 163.95. So of course, this is the level of resistance now that we have to be watching to the top side. But we can see here that the upward price movements have been relatively minimal. So there are real questions here about whether or not this is actually a sustainable rally. If we kind of pull out again, we kind of look at the broader picture a bit here. We can see that a lot of damage has been done to this chart. Specifically, what I would point to would be the loss of support, which was seen at roughly 156.80. This is a significant move to the downside here. We are breaking some very important support zones, and we have to understand the fact that prices have already broken through many of the Fibonacci retracement zones. Clearly we've broken through this red zone here, which is the 23.6% retracement, the orange zone, 38.2, and then this green zone is the 50% retracement. These downside moves occurred quite quickly, and we did manage to find some support at the 50% retracement. This is something I was talking about in prior videos because we did see a bounce here. This was a substantial move higher. This wasn't a small move in the upward direction. I mean, it's certainly larger than what we're seeing currently. But we did start to see some ultimate price failures here, and this did result in the development of a downtrend that is based off of these all-time highs. So currently, I'm just a bit suspicious of these, of these latest moves higher because they're relatively small in size. And we've just broken many some levels of support. We've broken many technical levels here in this move lower. One positive point here that I would suggest would be the fact that if we are able to break above this recent spike high, which came in at 163.95, we do have to start to consider the fact that this price gap needs to be filled. We did see a fairly substantial move lower, and this did create a price gap to the downside. The top of this price gap currently comes in at 166.80. So we could see a move back into that area. Wouldn't surprise me. But moves from there could be limited. I mean, we'll kind of see how things look as far as the proximity of prices in relation to the exponential moving averages, I mean, we might be above the exponential moving average cluster at that point. It's entirely possible. This is the hourly chart, so we will start to see some changes in these exponential moving averages. But could this be enough to start a rally higher? It could, because we do need to see this price gap filled, and a movement here could send us above the exponential moving averages. But the main problem that I have with this currently, because if we just kind of pull out to a longer term time frame here, we can see that many of these price levels have already been kind of destroyed in this downside process. We're currently looking at this 50% retracement, which did hold the first time, and it did result in a fairly strong rally here. But we've since broken that level. We broke the historical support zone, and we broke the 50% retracement. So currently, really the only thing that's holding up prices at this point would be this 618 Fibonacci retracement. That would be this level here. This is an interesting level because this goes back to another price gap, which occurred earlier. This price gap really happened, so it would have been roughly the middle of June. We saw a significant price gap here that also needs to be filled. I mean, we're seeing a lot of this type of activity in this stock. So this price gap does need to be filled, and as you'll see here, that level really comes in to very close contact with this 618 retracement level. I'll kind of zoom in here a bit so we can see it a bit better. But that's kind of a resistance zone here. Previously would now be expected to work as support. And this does come into very close proximity with this 151 level. So, in addition to all of that, you do have the fact that it's right ahead of the 150 level. I personally don't like to point to these kind of random round numbers as being significant. 100, 200, $10, $50, things like that. I don't like focusing on those numbers because I don't think they really mean anything. But you can definitely make the argument that people do start to watch those areas and start to establish positions in both directions near those levels. So this does come into very, very close proximity with the 150 mark. It wouldn't surprise me if we saw a bounce there. I'm mostly saying that though because there is technical evidence here to suggest that would be the case. It's the kind of the bottom of this price gap, and it's also the 618 retracement of this dominant move higher. So there are a lot of different issues here that should be watched. On a side note, I do want to mention that I'm going to be changing the name of this channel relatively soon, probably this week. That might make it more difficult to find the channel if you're just searching by the username Competitive Technology. You won't be able to find this channel that way anymore. So if you want to make it easier to find the channel, you might want to subscribe now so that you're able to easily find the channel. Other than that, everything else will stay the same. The price charts and this form of analysis will be the same. And a lot of even the thumbnail pictures will be the same. So you could find the channel that way. But you will not be able to use the username because I will be changing that this week. So it's probably easier to just subscribe to the channel, at least long enough for the username to be changed. And then that would make it easier to find these videos going forward. So here's the current market analysis for BROADCOM Incorporated, stock ticker AVGO.